Let me know when we're live here. Oh, it says live.
Yeah, we're just going to wait for everyone to filter in before we get started because it'll take time for everyone to filter in.
Okay, everybody, I see people are coming into the presentation now, and we'll start in a few minutes after everybody has time to get into the session.
And we'll wait for the numbers to level off a little bit as everyone gets in.
Just like to welcome you all.
I saw the sun this morning.
What's that?
I saw the sun for a few minutes this morning.
Yeah, it went away rather quickly. At least in Brewster, it's not out right now. But it's February and it's not snowing, so we're gonna make it through this winter.
We had heat and water all weekend, so right.
That's right.
All right. Well, I think people are starting to level out as more people will probably get on. So Annie, I'll turn it to you.
Okay. Welcome everybody for our February zoomed in call. Happy to see so many of you participating this morning. And we have some interesting speakers here. We'll have Kimberly Allard shortly talking about some licensure issues. And we have Charlotte from the bank to tell us about what's the latest in mortgage. So I'm going to turn it back over to Ryan now. I think he will give us some statistics for how we're doing this month. Ryan, over to you.
Yeah, good. I'm going to talk to Charlotte first before we get into some updates and some statistics before we end with the incomparable Kimberly Allard, who will enlighten you with everything, all the knowledge she can drop on a daily basis on you. And if you ever taken her classes, you know that. So thank you, Charlotte and Kim, for joining us. So Charlotte, you're with the Bank Cape Cod and Cooperative Bank Cape Cod, and thank you for joining us and y'all's support of our initiatives with this zoomed in on real estate and other things we do. What is going on with the inventory, with the mortgage markets? Because we're seeing such limited inventory. You have a lot of people buying houses maybe that don't quite meet their needs. So are you seeing more of a trend in construction financing and renovation financing and remodeling?
We certainly are, Ryan. Like you said, inventory is very limited right now. So we're seeing a lot of buyers, be it first-time buyers, step-up buyers, or second home buyers, taking advantage of renovation and construction financing to turn a home they find into their dream home.
Yeah, one of the things that's interesting me as resale prices have not crept, but dramatically gone up over the last couple months in the last year, is like that gap between, we know the cost of land and permitting and construction and raw materials and everything else in the building industry. That gap between resale and new construction kind of has dwindled as you get into that, as the resales have gone up at a higher pace. So you're definitely probably seeing that. What are the ways that people can, add a second story or any kind of bathroom the bathrooms and the kitchens and everything else? What are the ways that they can kind of do that with financing?
So we're able to do that as part of a purchase transaction. We will take into account the cost of the renovations you're looking to do. We get a quote from a contractor or builder to account for those costs, what's being done, and our appraisals are done taking those upgrades into account. So if you're buying a, single story house, like you said, Ryan, we would appraise that as a 2-story home with the full square footage of the addition. And the down payment would be a function of that purchase price plus cost to build. It makes it a lot more affordable for people to finance those builds where they're not paying it fully out of pocket. Down payments can be as little as 5% to up to 20-25%, depending on the scope of work and the loan amount.
And you're saying you're seeing some creative ways to do it because they want to get their offer accepted. So they're buying the house with cash and then doing the construction with financing as well, right?
Yeah, that's a way people are avoiding paying closing costs twice. If they have the means to pay cash, they'll do that, come back to us, finance the construction, and sometimes pull even a little bit of extra equity out of the house as part of that transaction.
All right, interesting times, doing everything a little bit differently there. What else are you seeing that's impacting it? As people start getting back to work and things like that nature, I'm sure self-employed is still becoming an issue.
It's still tough for self-employed borrowers. We're doing a lot of due diligence to make sure that, any effects that their businesses have felt on COVID, they still qualify and their business longevity is sustainable in this volatile market that we're in right now. But we're working with tons and tons of self-employed customers. They just are providing a little bit more paperwork than they would have 2 years ago.
So what are you looking for to create that, to show that sustainability?
Right now, we're looking for, let's say, a 2020 P&L statement so we can see the cash flow of the business compared to years prior. We're looking for business bank statements to support the earnings flowing through that P&L. And we're also having people give us a little bit of a synopsis on what they've been doing, which helps our underwriters offset the risk in their head. So if they're able to present, I am, Charlotte Green, landscaping master. I have put together a synopsis for the underwriter to let them know what I've done to mitigate the losses due to COVID or the business structure changes. And that's really helping us approve people more quickly. So it's a little bit more documentation heavy. It's all really heavily mandated by our regulatory institutions, but the extra paperwork that we're getting from people helps us approve loans. So we're really happy to be able to continue helping all of our self-employed customers here on the Cape.
Yeah, so with that, I think a lot of people that were self-employed weren't usually eligible for some government programs such as unemployment insurance or PPP loans and may have used that to tie them over. How does that look at on the P&L? Like if you used PPP through the summer or something like that to pay yourself, that kind of thing, as an independent contractor, are you running into some of that stuff being problems when you're looking at the P&L, that it was kind of government assistance to kind of get that income in there?
Assuming they have taken that government assistance and their business has continued, operating in a somewhat normal fashion, the PPP loan is not a hard stop by any means for financing. We just need it addressed in terms of how it was used, if it's been forgiven, et cetera.
And I know I've had some reach out in the last week, and you guys have a whole commercial sector over the Coop that if people need help obtaining new rounds of the PPP loans, to just reach out to you guys in your whole commercial sector that can help them with that.
We're doing them through the branches and through our commercial team. So we've really been very nimble with the PPP loan and funded tons and tons of businesses. I don't have the number right now, but I believe it's upwards in the millions. Don't quote me.
Yeah, no, I mean, hundreds of our members have taken advantage of the PPP loans. And like I said, I've gotten some reach out in the last couple of weeks from other members with this low inventory and sales drying up because of it. People are reevaluating on what they need on PPP as they look forward toward the spring for our own members. So definitely with that, reach out to your local lending institutions to access those PPPs. Anything else, Charlotte, that we're seeing in the mortgage markets that's been different than the last couple months?
We're just seeing those quick closings because it's tough for people to get their offers accepted. There's, as you all know, so much competition out there. We're seeing a lot of elimination of mortgage contingency clauses and appraisal contingency clauses. So that's got us working, making sure we're getting everything squared away really early in the game for our customers and pivoting to make sure we're prioritizing those fast purchases and we can meet those 30-day timelines when it comes up, because a lot of what we're hearing is that's what it's taking to get the offer accepted.
All right. Well, thank you, Charlotte. And I know people know how to reach all of you guys at the Coop if they have any questions for you, right? You have people all over the Cape.
All over the Cape, from Harwich to Falmouth and beyond. We're mycapecodbank.com. Always happy to field any questions you have. And thank you, as always, Ryan, for having us, or me.
All right, thanks. And I have a few updates to go over with you guys. as always, before we get to Kim as well. So this Thursday at 10 a.m., the Massachusetts Association of Realtors monthly webinar is Realtor Forms, Proper Completion and Avoiding Violations. You can go on our website, on our calendar's website, and sign up for that. It should be a great 1-hour webinar to understand proper completion of forms. Also, March 11th at 10 a.m., we have a live webinar for you, Selling Luxury Listings in Our Market During the Pandemic and Beyond, with Michael Lafito. He created the Luxury Listing Specialist designation, and it really goes around the world teaching about luxury real estate. And so he's doing a webinar for you on March 11th at 10 a.m. This is an elective class for the CCIAOR designation, which I'll talk a little bit about in a second. But so take time to put this on your calendar if you want to check it out and get some knowledge there. Our upcoming C class, as we've talked about before, we're doing 1 hour, one class a week every Wednesday at 1. Here's the upcoming classes. I would say that the escrow class, even for the non-brokers, is important because, as Annie will probably assess to you, the more agents understand escrow, the easier it is for brokers. On making sure that check's not sitting on that dashboard for several days or other things of that nature, and the important documentation brokers have to take with care with their escrow accounts to make sure you're doing that. The alternative dispute resolution and procuring cause, that's a great class, especially in light of what we hear in our marketplace. And I'm going to get to this, but the idea that, I think there's so much misinformation and lack of knowledge around what is procuring cause. I would say this is a great class to take because I hear things all the time where it seems like there's a lot of misinformation around procuring cause. So that's a great class to kind of learn about the professional standards process and arbitration and how that all takes a case and with procuring cause. And then the 4 classes in March are all part of our CCRES designation, Understanding Agency and Disclosures and Transactions Start to Finish, Pathways to Professionalism, and Brokerage Liability. So some great C classes for you to take through February and into March to make sure you sign up for. Now, I've talked about this, but just highlighting the Cape Cod Real Estate Specialist designation that we've created, the requirements right there of 15 transactions in 3 years total. So an average of 5 a year, not a very high bar necessarily to reach, but just wanted to put that there. 3 years of good standing as a member, and then also no code of ethics violations in the last year that you've obtained the designation. This designation is not designed to be some high bar that no one can achieve. It's actually designed to be a relatively low bar that most can achieve, because we're trying to encourage people to gain the knowledge and move up and distinguish themselves as a Cape Cod real estate specialist. You have 3 classes. This is for an agent track. The 3 classes you see here for the basic classes, core classes, and then you have a core MLS requirement training class, and then you have advocacy and elective participation credits as well needed. So you can always reach out to Whitney and our staff, and she can help you through the credits you need to do that. Also, new for 2021 will be a requirement to attain the specialist designation. You'll need to take Fairhaven, which is the new NAR online fair housing implicit bias training course that is pretty interesting. Annie, I know you've taken it and you held a session with some of your agents yesterday who would take it. What's your feedback from agents who have taken it? Do they enjoy it, and do they want to continue? Do you encourage everyone else to take it? We got you on mute. I'll ask you. There you go.
I do encourage people to take it. I've had, a dozen or so agents take it. We had a very interesting discussion on a Zoom call yesterday. It's very enlightening. I think people felt that although they thought they knew what their position was and how their thinking was, these scenarios that were presented in the simulation were very eye-opening as to what we need to guard against in today's world. So I would highly recommend the Fairhaven simulation. And it really only takes about an hour. It's painless.
All right, thanks. And we'll be doing some things along with Fair Housing Month in April around Fairhaven and ways to take it and then kind of have discussions around it. Because I think one of the most important things that Annie's pointed out is that it really helps to be able to discuss afterwards on that discussion, have that talk around the scenarios that you get presented with, implicit bias scenarios and fair housing scenarios that are so important, as we have seen countless tests over the last several years of real estate agents across the country just failing fair housing and committing fair housing violations. And a scathing report that the New York State Senate just released around their reports and what they have found of the lack of training and the lack of knowledge and the lack of execution around compliance with fair housing laws in New York. Want to congratulate our Leadership Academy class of 2021. These folks were selected through our application process. We had, more than 40 applications for only the 15 seats, and so they will be starting in March with their Leadership Academy journey through the end of May. And so we want to congratulate all of them for taking part in the Leadership Academy and for being selected, and encourage you, if you're interested, to be part of it next year as well. A couple opportunities to get involved coming up is we're taking calls for our Leadership Development Committee, which is the committee that recruits and qualifies candidates for the board of directors and to oversee the annual board election process. That the time commitment's relatively minimal. It's 3 to 5 virtual meetings from May through September. But we are taking we need to appoint this committee in March, so to get started by May. So if you're interested, contact Marissa Sear, and she can give you the registration, the interest form to be considered for an appointment to the Leadership Development Committee. Also, we're taking interest from the Government Affairs Committee, which is the committee is to help monitor and analyze the impact of public policy on advance of realtors' ability to operate, a property owner's ability to transfer property, and then make sure the community is a desirable and viable place to live and do business. So we're looking at approximately 8 meetings a year, and you can contact Scott LaJoy, our Government Affairs Director, at his email to partake and suggest interest in that committee. A couple MLS opportunities that we're going to be having coming up. That we're putting together a public records task force to look at the role of to evaluate options for public records software and ensure we're providing our members a cutting edge platform that integrates into your business. What we're looking at is what we're using the best out there, the best for our members, and if not, what are the alternatives? What are the features of it of a software system that you really want, or how can we better integrate it all together? We'll be taking a look at all of that. We're expecting this to be 3 to 5 virtual meetings from April through June, and you can contact Nick Blair for more information around that and to basically put your name in for being part of that public records task force. And then we have our product lab group that we've had for a couple of years, but we're looking at 4 or 5 potential products this year that we would need you guys to look at. It's a way for you to easily vet, test, and provide feedback on potential new products and services that we offer in a virtual format. And so this is a really great way to look at some of the things coming down the pipe. Would they be useful to you? And that sort of thing. So take a look at that, and you can contact Nick as well, and he can get you the interest form for that as well. I wanted to highlight our FLOPLAN, our floor plan creation app, and here's a recommendation from Sunny Fellman on it. She's said she emailed me last week and said she was embarrassed to say she's still been paying $129 for floor plans until now. She just used FLOPLAN for the first time and was impressed. It was simple to use, and floor plans came out perfectly. So, one thing that we're doing is saying, okay, consumers want floor plans. We see it now, especially in this digital world. How can you best provide them to them? We have a app that we're providing to you that you can create them for $12. No better place around to create floor plans. So don't take it from me, take it from people like Sunny and some of the others that we've seen give out testimonials to their floor plans. So take a look at that. A couple MLS updates. No showings coming soon. No showings. No showings means no showings. You cannot show the property even to agents in your own brokerage. A showing means an in-person or virtual showing. You know what a showing is. Now, videos are not showing. So if you're broadcasting yourself on Facebook Live from a property or recording a video and putting it out publicly, those kind of things are not showings. Showing is a showing. And you can publicly market a coming soon no showings listing, just can't show it. The coming soon was designed for you to allow you to market the property prior to it being active in the MLS, but it needs to be in the MLS as coming soon while you're doing that to tell everyone else it's coming soon. I would say with that is the way I've always viewed as some of the best things that we use coming soons for is you want to make sure people are here on the first, second, third day of showings, especially in today's market. So if you put it on a couple days before as a coming soon before it's active, then you can try to make sure that people have time to get here to see it the first day showings are allowed. Some trending issues that we're seeing I wanted to highlight. Approximate square foot should not include basement. We have basement square foot and finished basement square footage for you to use for that, but approximate square footage should not include basement. You could not make compensation dependent on buyer's agent attending showing. We already had this question come in chat, right? So if you say, you cannot say in an MLS that the buyer's agent has to be present to be compensated. You can say buyer's agents have to be present for all showings, right? But not to be compensated, because then you're predetermining procuring costs. And you cannot predetermine procuring costs, as procuring costs is a set of factors to determine on whether that buyer broker is entitled to compensation for that transaction. So while you can say buyer's agents must be present for all showings, it cannot be to get compensated. So I think a lot of people miss that. If you don't want to compensate everyone that you're working with, don't belong to the MLS as you belong to, right? Like, so what you're doing when you join the MLS is saying that I'm agreeing to compensate all other buyer brokers that bring me buyers. It doesn't say I'm agreeing to compensate all other buyer brokers that show up to showings to get compensated. So, you know, that's a limitation on compensation. So I just wanted to make sure you clarify that. And then also you cannot list a property as active that already has an accepted offer. If you have an accepted offer, contact our staff. We'll talk you through comparable sale. But the MLS is a place to market property for sale, to offer cooperation compensation to everyone else. If you're not offering cooperation compensation because you've already brought in a buyer, then it's not an active listing. We did add comparable sale to allow you to get more data, so we can get more data on comps and you to claim some credit as that way. But if you're trying to go ahead and bring offers before you put in the MLS, then it shouldn't be active and listed as a residential property in the MLS. So wanted to give you a quick market update. So for January, the Housing Affordability Index fell to 72 for single family homes in Barnstable County. This means that the median household income is only 72% of the needed income to buy the median priced home in our market using prevailing interest rates. So last January, the index was 90, which means that that the median household income was 90% of what was needed. So what that shows is that 90 to 72 is a 20% drop in percentage wise, 18 index drop, but we're not going off 100, we're going off 120 is the ideal target on housing affordability index. So it was actually a 20%, it was actually a 20% drop. However, I do want to note that this is not the lowest we've seen the housing affordability index. In parts of 2006 and 2007, the housing affordability index was lower than it is now, which means that it took more income to qualify to buy the median price house than compared to the median income than it does now. So this is not the most unaffordable we've actually seen the Cape in housing prices. All right, so this is the lowest January of new listings that we have on record. So the amount of new listings that came on in January. Look at this chart right below it that I pulled out of InfoSparks. It shows that January's new listings were lower than any previous January we've had, which means that when you look back historically, we did have stunted new listing growth in January. This is notable because, as we talked about before, if you look at the chart on the left, it is we had seen year over year, month to month, from looking at the same month in 2020 and 2019, we had seen growth in new listings per month, and now we've seen a huge decrease and drop in January. We'll see how February turns out and see how this shakes out. But I thought that was noteworthy to point out, and that this was the lowest month of new listings for a month of January that we've seen, because we always view January as one of the lowest months besides December for new listings on the Cape. Like, look at the trend lines. When you see those low points, that's always December, and then as it comes back up, it's January, February, March, April. But we didn't see as big of a jump from December to January as we normally see when we got down there. So wanted to point that out as noteworthy to think about as we move forward. So what does this all mean? It means the same thing that you know, which is that we have historic low inventories of homes for sale and we have historic high prices, right? I mean, that's not going to be news to any of you guys. You guys are still seeing multiple offers, tons of showings on properties, that kind of thing. I am starting to hear some feedback that there's starting to be some properties that don't go quickly, as maybe sellers and listing agents are trying to reach for some properties on pricing, because I think, as you guys know, it's hard to price right now, right? As a listing agent, what are you pricing it at in a market that's moving so quickly? So wanted to highlight those numbers as well. So I want to bring Kim Allard in now. Kim is a real estate instructor and a past president of the Massachusetts Association of Realtors. She's also a member of the Board of Registration of Brokers and Salesperson, but Kim teaches a lot of classes for us and teaches around the state and the country even, so she has a good perspective. One is the Board of Registration recently released a long-awaited frequently asked questions along teams. Real estate teams, and so wanted to have Kim on to talk about this and some of the highlights I thought was interesting from this, that the state brokerage license law has no guidelines for teams in the law. You're just basically, Kim, taking the questions that frequently arise from teams and applying the law to it, right? Is that what you guys kind of did here?
Yeah, we've been, first of all, thanks for having me. Good to see you guys. Yeah, we've been getting a lot of questions about teams, and the concerning part about the questions is that people are presuming that the team is actually a recognized entity in Massachusetts, when in fact it isn't. And I simply suggest to people, when they're asking a question about a team, that they substitute the word agent. Because, you know, I hate to say it, but nobody cares about your team except for you and your team leader. You know, they're put together for reasons. They're put together for, you know, production, maybe because you like to work closely with somebody. But, you know, we find that a lot of folks who have teams actually think somehow their teams allow them to be structured differently for agency, for payment, for advertising, and there is no difference.
All right, so one of the first things I thought was interesting, and this is what we've talked about before, is the nature of the relationship for each affiliate licensee on the team to the client should be disclosed on the mandatory relationship disclosure form. You may use, and y'all have clarified, you may use one form for multiple licensees. So like if you're a 2 or 3 member team, how do you suggest them do the consumer agency disclosure form?
Yeah, so, we all, it's been beaten into all of us that we have to do this at the first personal meeting. And, thanks to Ryan, who actually showed up at one of the licensing board meetings and asked for some clarity when, you don't meet somebody face to face first. I'm going to tell you that it's always a good idea to do it, even at your first Zoom meeting or, your first virtual meeting. But at the first personal meeting, but no later than any type of an agreement being signed, meaning a listing contract, et cetera, if you're not meeting in person, if everybody is representing the seller on this team, then, you can say Bob Smith, Annie Blatz, Ryan Castle, and Kimberly Allard are all, seller's agents. But what I'm finding in teams is that's not usually the case. People form teams not because they want to have 5 seller's agents, but they have a buyer agent, they have a couple of listing agents. And if you're going to give say, for example, there's 3 of you on the team, 2 of you are listing agents and 1 of you is a buyer agent, or any mix, you're going to go in and sit with that seller or have a discussion with them. And if that seller has now gone through you've gone through the listing presentation with the seller, and the 2 of you have disclosed that you're seller's agents, then I'm sorry, that buyer agent is now a seller's agent, because they've heard and they've been exposed to every part of the seller's motivation, likely during that discussion. So you can call yourself a buyer agent on a team, but what's going to determine your agency relationship is what you've heard and what you've disclosed during your discussions with the seller. So, this is something we see often, is that people say, oh, I'm the buyer agent on the Allard team, but yet you're exposed to everything. You have access to transaction rooms, you have access to everything, and you can't, that just can't be. So, if you want to disclose all relationships on one form, I would suggest that they be the same. And then if you have somebody else who's acting in a different relationship on your team, then you have to disclose that. I would obviously put it on a different form.
Yeah, and then the next one that I thought was interesting is, what the board administration has said about team names, right? And I think where you're trying to get at with this guidance is that you shouldn't try to do something that indicates you're a brokerage or a licensed entity, because you're not, right?
Yeah, I think it's Connecticut or Rhode Island. One of them has taken a very, very, very strict position on names and what you can and can't do as teams. They basically have prohibited them. But in Massachusetts, we tried to recognize that, this is popular. But yeah, Ryan, to your point exactly, you cannot present yourself as being the brokerage or being some higher entity. The consumer should be able to know who the brokerage is. And if it's the Allard team under XYZ Realty, then XYZ Realty is the brokerage. And I can't use certain words, or best practices suggest that you don't use certain words, that you're putting yourself out there as the brokerage.
Yeah, and then the last one is payments, and we see this all the time, even with salespeople on licensees, right? But it gets more with teams and how you structure the teams of payments. But all payments to licensees, whether they're on a team or not, should be coming from the broker, and you shouldn't be filtering it through team LLC if that team is not a licensed entity and things like that.
Yep. So, this is where it gets really tricky. A lot of teams are trying to protect themselves or set themselves up at the advice of their accountants with either an LLC or an LLP, which, I'm not an accountant and that's way outside my area of expertise. But what I will tell you is, if your accountant advises that and you now become a legal entity, your legal entity must be licensed in the state of Massachusetts. So that means if Kimberly Allard, Annie Blatz, and Ryan Castle want to pass themselves off as the Allard team, and we become an LLC or an LLP, now that entity must be licensed in order to practice brokerage. And then also, if I want that LLC or LL, whatever it is, to be paid from, let's say, XYZ Realty is my brokerage that I work for, and I want my brokerage to now pay my set up entity, business entity, I must be licensed, because your brokerage cannot pay an unlicensed business entity. They can pay a broker or a salesperson, but they can't pay a business entity. So, and then if you're going to do that, now you've got a whole bunch of other issues that follow along with that. So I think people are trying to save some tax headaches, but I'm not quite sure they're accomplishing that. And if you get caught practicing with an LLC or an LLP or any type of business entity that is unlicensed, you could have your license revoked and be unable to practice. So
yeah, I know that is something that I've seen the board registration has come down with some folks recently getting paid into, getting paid into LLCs when they're not licensed entities and things like that, and putting their licensed entities on the consumer agency disclosure form, right? Like, I mean, I think that goes back to what you were talking about with the team, right? People will put the Allard group as on the consumer agency disclosure form, but there's no licensed entity of the Allard group.
Right. And what they're looking for there is not, again, remove the word team and put in the word agent. Under the brokerage name on the agency disclosure form, would you put the team / would you put the agent? The answer is no, you would put the name of your brokerage. So really, I mean, I not insulting folks that have teams. I understand there's a reason, but the state of Massachusetts does not recognize them in any way, shape, or form. So you just really need to understand you work for a brokerage. Your advertising must have the name of your brokerage in social media, in your mailings, on your signs, everything. We have not taken it as far as making it a size requirement, but I have seen some states that have been very clear on the size of the team logo as compared to the brokerage logo. And here's what I'd say is, you really should be checking with your brokerage, because I mean, again, I'm part of a franchise, but my franchise has what they call a logo identity guideline. And they are very strict, not only on the font, but the size in relationship to the DBA. And that goes for teams as well. And if your brokerage doesn't have a logo environment guideline, you want to check with your broker and say, hey, look, I'm advertising. And as an agent, you don't have the ability to advertise on your own, so you shouldn't be advertising at all. But if you are advertising, it's with the presumption that your brokerage has allowed you to. So you need to go back there and ask them what the guidelines are.
And Kim, one thing that we're seeing a lot more on the Cape, and I'm sure it's around the state right now, is investigators from the board registration out in brokerage offices, stopping by, looking at escrow accounts, looking for licenses, looking at doing all the license checks they normally do. That is something, I think that, and then just enforcement of license law is something that you guys have been pushing for them to step up and actually do for a while.
Yeah, it's tough for them to get out, but here's what they're doing. They may not even show up at your office. They may just mail you. I was audited last March, and, I laugh at it because it's not because I'm above it. My office is susceptible to anything that your offices are, but I had to laugh because I don't even think the woman knew who I was. And I, again, should not have received any special treatment, but I got a chance to audit the actual process of being audited. And they just sent me a letter, and then it was an email, and the email actually, I was concerned because the email, although it was from a state, .gov, mass.gov email, basically said, we need all your escrow account information. And since then, I've had people contact me saying, is this for real? And what I would say to you is, if you get an email asking for escrow information, and this may not want to be put on record, but the state does not have a secure website or a means in which to submit that information. So I've told the executive director, no, that's not happening. You may not get off the hook, but what I have said is look for a follow-up letter. Your brokerage will get a follow-up letter. And here's, for the dozens of you that are on this call, you're like, well, what do I care if my brokerage gets audited? Well, if you're not the broker of records, you probably don't care. But here's what happens during that process. They'll get an email. They don't even have to show up at your office. And then they will follow up with a letter. The letter asks for a number of things. And those things are your business certificate. So here's where I was shocked and not so pleasantly shocked to find out that my own business certificate had expired. So I ran immediately with my business partner to the town and got that taken care of. But they're looking for business certificates filed with the town. They're looking for your, your bond information, and they're looking for CEs. Now, here's the thing. They're not so much concerned about the broker's CEs as they are about the agents affiliated with that brokerage. So they could, at any given time, say, you have 20 agents in your firm, we need all their CE certificates for the last cycle, or maybe even a cycle before that. So that's where you as the agent want to be concerned that, everybody in your brokerage is following good practice. You guys have great advice from your association, but that's where it gets a little tricky from you guys. But yeah, they will send you a written letter and you have to respond. And, the board only gets involved if things become disputed to some extent. And I have to tell you, we're all practitioners with the exception of one person that sits on the board. So we understand it, but we also understand that, taking CE, it should be just basic to you now. You've been doing it for years. So when we see violations like, oh, I sent in my renewal, or I did my renewal online, but I didn't take my classes until 2 days before my license expired, but I already told you that I did. We don't look favorably on that at all. I mean, guys, this is, it's 40 hours to get your license and then 12 CEs after that. I don't think the state asks for a whole lot. So, we don't look favorably on those things. We try to understand in the in the pandemic, the governor did give you a little bit of a grace period in which to renew your license. So, we were pleased to see that, but don't try to cut any corners, because here's what I'll also tell you is that the investigators that are actually investigating, not the prosecutors, but the investigators are also investigating other disciplines. So they could be investigating veterinarians, plumbers, whatever, and they don't have a working knowledge of our industry. So the subtle differences that you may think allow you to skate by on some of the issues, an investigator will not see it at all. Escrow is escrow. If you are holding a check for an extended period of time, or as a salesperson for any period of time, that's going to be an escrow violation, and they don't understand the subtleties of how we do business. So I wouldn't try to skate on any thin ice there. They have very little practical understanding, and you always want to double check with your broker or your association when it comes to best practices.
Now, what are you seeing that comes to the board level of complaints outside of the investigations that are the most problematic y'all are finding?
We see a lot of agency issues, and those come from the consumer, believe it or not. A lot of consumers, I'll give you one example. A woman sold her home. I forget the number. Let's just say it was 500,000 or 400,000. And then the agent that was her listing agent sold it to a contractor. And apparently everybody in this community knew one another. And she sold it to a contractor, and the contractor presumably was her customer in this transaction. There was no buyer's agent involved. She was on the buying side. And then the contractor renovated the house and sold it for like $300,000 more. And the the seller complained, wrote up a complaint form and sent it in. And the investigators actually found that it was undisclosed dual agency, because there was no agency disclosure form that was able to be produced by the listing agent, where she disclosed to the buyer that she was not his client, he was not her client as a buyer, but there was nothing that said that he was the customer. And the agent's excuse was, well, they knew one another. Everybody knows everybody in our town. So the listing agent just assumed that the seller understood the relationship and that the buyer understood the relationship. And then in the absence of a document that said, this buyer was not my client, this buyer was my customer, she was found in violation of undisclosed dual agency. And I believe in that case, again, we are very strict on that because that is the basics. If you don't understand who your client and customer are, and you can't prove that you told them whether they're clients or customers, you're looking at revocation. And that means like you can't practice. You have to go and apply for another license. If you're a broker and we revoke your license, then you have to go apply for a salesperson's license and go through the whole process. If you're a salesperson and we revoke your license, you're done. So pretty basic. So initially the complaint was that this builder put it on and sold it for more. So the complaint was, I wasn't properly represented by my agent, but what the investigator found out was that wasn't the case at all. The builder had the right to renovate the house, and there was clearly a lot of differences and improvements. So that's not what the agent got nailed for. What she got hit for was undisclosed dual agency, because she did have a relationship with the builder. And a lot of us do. When we get a house and we pick up the phone and we call some people to let them know about it. If you've dealt with those people before in a transaction as clients, they're your clients. And now you've got a hopefully disclosed dual agency situation. But if you're going to start calling people first before you make it open to the general public, you have to understand what the optics of that look like. And if you can't support who you represent, this was a very clear case for the investigator, and we supported it.
I think, in this hot market, I've been talking to a lot of brokers, right? And that this idea of undisclosed dual agency is hitting a lot of people, is worrying a lot of people right now, because the idea that buyers are thinking that they can get a better deal going straight to the listing agent, right? And so, in this hot market where you're having multiple offers, how do you suggest to people to handle, because I think this is a really good question, how you handle unrepresented buyers in multiple offer situations? It can kind of get tough, right? When you have buyers being represented by buyers agents and buyers being represented unrepresented, and then what if you have a dual agent in a multiple offer situation? So in this whole environment, we're seeing a lot of multiple offers, and your market has been in that, when you get closer to Boston, in that for quite some time. So you've seen this around the state prior. What is your advice on how to handle multiple offers?
Ryan, it's such an important question. I'm so glad you asked. And I hope that everybody on today's webinar is experiencing multiple offers. What's better than that? The byproduct of multiple offers is a lot of people that have just jumped into the market recently don't understand what actual real estate practicing is, because they stick a sign in the front yard and hit enter in the MLS and the house is sold. So there's not a whole lot of skills being learned. But also, to your point, multiple offers, I'm going to give you some best practices, and then I'm going to tell you at the end of this whole thing is you need to ask your brokerage and your broker, what is our office policy on multiple offers? And if you don't have one, you need to get one, because this is where it's going to go bad. If you have 7 offers, you're going to think about it, that there's only going to be 2 people that are going to be happy when you pick one of them. That's going to be the buyer that you picked and the seller. There's going to be 6 other people that are furious, and 6 other people with their agents, or maybe not with agents, but you're going to have a lot more people that are upset about a multiple offer situation than you will have happy. So you want to be able to, first of all, go back and say, look, I'm following our brokerage policy. And if you have a brokerage policy, it should be something along the lines of, here's what we discuss as a brokerage with our sellers prior to listing, or during the listing presentation, or when the listing contract is signed. And it should look something like, Mr. and Mrs. Seller, in our marketplace, if we price your property or if you price your property properly, we expect to have multiple offers. And here's the benefits of a multiple offer situation. You get to choose the terms that you want, and terms are not only price, but they're the closing date, the down payment, the contingencies, etc. Who's working with the best lender or reputable lender, etc. The downside of multiple offers, because here's where I think a lot of us are falling short in our obligation to be transparent with our sellers, is we're not telling them the downside of multiple offers. A lot of us or you or practitioners are running around saying best and final by this date, and you're, squeezing in small showing times. Here's what I will say to you. I would ask any of you to justify to me no showings until the open house Sunday between 12 and 12:15. And of course I'm exaggerating, but a lot of you are doing no showings until the open house, and then it's an hour open house, an hour and a half, maybe 2 hours. Now, I know what you're trying to do. You're trying to generate interest. But the flip side of that is you have no idea who's coming to these open houses. People are not signing in with real names and real phone numbers. You have zero ability to follow up with these folks. It is a security risk. Most of you do not double up on open houses. Some of my real estate peers that I know require 2 people at an open house for this very reason. And some people actually have a policy, brokerages, that say if you're the listing agent, you must have another designated buyer's agent with you because you're not selling your own listings. Again, these are office policies. They're not my policies, but you got to figure out what yours are. But let's think about an open house or restricted showings gone awry. You leave that house 2 hours later and the seller says to you, so how did it go? And you say, oh, it went fabulous. Now, the seller should have the good sense to say to you, well, what's fabulous? And your answer is going to be, we had 37 groups of people through. And the seller doesn't, but they should have the good sense to ask you, well, what does 37 people mean? I don't know. I ask you guys. 37 people through that house that you can't follow up with because you don't have real phone numbers or their agents' names. 37 people through that house with 37 other people that look like, first of all, a 1,200 square foot ranch does not look good with a bunch of other people in it. In this weather, the floors were a mess. You had no idea who was in the house. It's a security risk. And I got to be honest with you, I've had situations where I've turned down a road to see so many cars up and down the street that my buyer clients have said, let's just forget this. I don't want to deal with this. And I'm like, no. This is the house you really want to go to. So we park, and next thing you know, there's police outside. Now, are there crimes happening in this neighborhood? No, but people were parking in front of other people's driveways and people couldn't get out. So the neighbors were calling the police. And you know what my buyer said? I don't want to live in a neighborhood where the neighbors call the police on one another. So I don't think, back to my original point, open houses serve a purpose, but they also, you're losing something on them. So if you have a policy that says you're doing open houses and you're restricting showings, then you need to be transparent with your seller and say, look, first of all, here's my other question to you. This is New England. Do people not go to the beach in the summer? How do you know that you're getting every able, willing, and capable buyer at your open house? I spend more time in New Hampshire than I do around here in the winter and in the summer. And what about skiing? Do people not go away and go north to go skiing or wherever you go? So for you to look a seller straight in the face and say, I can give you the optimal exposure for your property by holding one open house on a Sunday or a Saturday, I don't think you can do that. And that was my challenge to you. So my advice is put together a policy with your office, and maybe your policy looks something like, it's our experience that, houses go live on Wednesday and then they feed to all the portals and all the wonderful sites that your MLS pushes to on Thursday, and that there's a block of time on Friday. So you can tell your seller, look, Give me 4 hours on Friday that you can be out of the house. And then give me 3 hours on Saturday. And then I'll do the open house on Sunday. And then for people that might need to come back to make that final decision, let's get, do some time open on Monday. And if you put those times into the multiple listing service that say, showings will be available during these times, first come, first serve, 15-minute increments, COVID policies, masks, gloves. Maybe you're there to make sure it's 15 minutes. Maybe you're not. You decide what your policy is. But then if they're scheduled through you or through a showing service or through your office, at the end of that 4 days, you can now look at the seller and say, we had 37 groups of people in. I've contacted all 37 of them. I've heard back from 30 of them. Half of them have a house to sell before they can buy. The other 25%, I weren't interested, and 25% of the people that were left said they have further interest. I told those folks that you want to make an offer by Monday night at 6 and that they should let me know. You've now just done your job. You've exposed the property. You've given it ample time. You've let everybody know whether there's a multiple offer or there isn't. And now we get to multiple offers, which was really the question. If your goal is to create multiple offers, well, then people should know what the steps are prior to getting there. All of you have had buyers in this market, and not one of you can say you've been treated fairly. And many of you have said to yourselves, why in the world wouldn't that agent come back to me, knowing that I showed up to see the property, but yet you just accepted another offer? You want to say to your seller from the very beginning, if I'm going to create this hot mess of a frenzy, because you just told me you were, and you've now got a way to handle it or manage it, I'm going to expect that we'll have multiple offers. And Mr. and Mrs. Seller, here are your options. I'm required by law to deliver all offers. So I'll take a little shortcut here. Guys, you don't have the right to hold offers. If your seller tells you that they don't want to look at offers until Monday or a date specific, then you still must deliver the offer. They have the right not to respond. You do not have the right to hold offers. Now, if the seller says, I don't want to see them, then you should get it in writing, because that needs to be in writing that you've been asked to do something you're required to do.
And then the one big thing on that too, Kim, that we're hearing is in this situation, and I'm telling people, like, as a buyer's agent under the code of ethics, you have the ability to request from the listing agent in writing that they submitted the offer to the client. Like, I get this question a lot about, well, should the seller have to initial declining of the offer? No, they don't have to, but the listing agent has an obligation to tell the buyer agent in writing under the code of ethics that they did submit the offer to the seller. And I want to be clear that there is ways to then help that, because that's one of the biggest complaints we're getting right now is, how do I even know my offer was looked at?
Yeah, absolutely. So, you need to take a look at the code of ethics, and specifically the areas that deal with offers, and what your obligation is. I think it's standard of practice 1.15. In response to inquiries from buyers or cooperating brokers, shall, with the seller's approval, disclose the existence of offers on a property. And then it goes to talk about other issues regarding.
I love how you have the code of ethics right there at your fingertips, right beside you.
Mike, I carry around a highlighted, notated copy with me everywhere, because it's just that much easier. But yeah, so you have an obligation, but now back to your multiple offer situation. If you've sat with the seller during your listing presentation and say, here's our office policy, what would you like us to do when we get multiple offers? Would you like to review them as they come in? Would you like to hold them until a certain time and you review them at a certain time? Because wouldn't you like to know if you were even the listing agent, but also the buyer agent? And then you need to tell the seller what the consequences are. I just had a multiple offer situation the other day. I said to my guy, I said, we have multiple offers. Do you want me to go back with best and final? Understanding that everybody could say, you know what? I don't want to get in a bidding war. I'm withdrawing my offer. Now, not many of you are sharing that with your sellers. What if you got 7 offers and you just decided to do best and final without your seller's permission? And you said to your seller, oh, we're up to 7 offers. And then Sunday night you called them after the open house and you said, okay, here are the 5 offers or the 4 offers. And they said, you told me we had 7. And you'd say, well, I did best and final and 3 of them didn't want to get in a bidding war. How are you going to explain to the seller that you just acted without their authority and lost what could have been the best offers? And this is a huge problem. So if you do not have a discussion with your seller in writing, and guys, you shouldn't be making up the policies. It should be at the instruction of your broker. So have an addendum to your listing contract that says, here is our, in this market, you likely will experience multiple offers. Your instruction to us is as follows. And then list what the options are in your office. Now, understand that the seller has the right to accept an offer at any time. And if you're not explaining to them that they can do that, or you're not explaining to potential buyers that a seller has, you might say, the seller has requested that they have the ability to review all offers Monday at 5 and will make a decision by Monday at 8. But the seller reserves the right to accept an offer at any time. That's not illegal. So,
yeah, that a lot. People are like, well, they said they were going to have offers till 5 o'clock on Sunday and it goes pending on Saturday. And I'm like, they took an offer. You can't, a seller has the right to do that, you know?
if you get an offer that's over asking price with no home inspection, no bank contingencies, and no home to sell, and they were going to make $100,000 of their deposit non-refundable, I'd take it too.
Yeah, I mean, I think that's the biggest challenge, right? Having those hard conversations with your seller right now, because the seller doesn't want, I mean, the biggest problem with listing your house is where do you go, right? But a lot of people can help you try to figure that out. 2 is though, where do you go for the showings, right? And so, we've seen in our market where the seller says, okay, you can have this time on Friday and Saturday to show my house. And it's like, say it's 30 or 40 appointments. You might fill up 2 or 3 days in advance. Like, how are you having those hard conversations with people? Because it really seems very difficult right now to handle all those conversations and have those hard conversations with the seller. Because where does that seller go for 8 hours on Friday or Saturday while their house is being shown? Either they can't go sit at Starbucks right now.
Well, yeah, exactly. And that's why I never suggest, first of all, I can't promise that everybody that's interested in your house is going to see it in 2 days, which is why I always recommend a minimum of Friday, Saturday, Sunday, and Monday, because now you can maybe do 2 or 3 hours in a day and have a significant amount of activity. But, if you think you've got it like down around here, if you have anything priced under 400,000, it's just incredibly difficult. 27 offers, 60,000 over asking. It's just ridiculous. But if you've got a house that is going to have that much activity, then, suggest to your seller that they open it up for 5 days or 6 days. Be that listing agent that you wish you were dealing with on the other end. And there's nothing wrong with telling your seller the more exposure they get to the property, the better choices they'll be able to make.
Yeah, selling your house is a time consuming and is a sucky process to start with. And in this market, it's a different kind of suck, right? Like usually it's for 3 or 4 weeks I'm having to keep the house picked up because I might have a showing today or something like that while I'm at work. But now it's like so compressed. It's like, what do I do as a seller? So I think people need to remind themselves, like, put themselves in the seller's shoes for a few minutes and think about what it's like for them too.
Yeah. Maybe your office, if you guys are looking to stand out and be trendsetters, come up with activities for sellers. Look, come to our office and you can have the conference room. We've got a big screen TV and we'll have toys for your kids or something, or come to our conference room and work out of our conference room for the 2 days or whatever. Or maybe you're paying for office space for your sellers that have to work from home, or who knows what you're doing, but come up with something. But God, the 2 days of showings and you guys assuming that you're allowing the seller's property to see the open market, you know what, you can't tell me with good conscience that that is the complete exposure, and not with the number of buyers that are out there. So, you know, I challenge you guys to rethink what's in your seller's best interest. I challenge you to be, you know, the trendsetters in Massachusetts, with, you know, getting policies out there. And, you know, maybe the policy is something that you attach to the listing. And I'm not suggesting that that's necessary, but, you know, can you imagine if you actually went to a listing and saw a checklist that the seller signed that said, here are my requests? You know, I see things like, I had talked to a listing agent the other day, and he said, I don't work weekends. You know, I work all week. I don't work weekends. And he wasn't returning phone calls. I'm like, I don't care when you work, but when you have a fiduciary duty to represent a client, you cannot abandon that client at critical times. And I don't care if that critical time is Saturday or Sunday or Monday and Wednesday, but if you're not available and you can't do your job, you have to make somebody available. So, you know, the things I see in listings, and Ryan, it mentioned it earlier, you know, conditioning compensation. You must be here to get paid. You can't condition your compensation. I mean, it's just some crazy crap. And, you know, and I'll go out on a limb because I heard this one earlier about, you know, home inspections for informational purposes only. Guys, I don't even know what that sentence means. It is just nonsense. What is a home inspection for? I've never seen a paragraph that says home inspection is so I can have 40 sheets of paper and wallpaper my family room with it. All home inspections are for informational purposes only. You're missing the entire clause of a home inspection, which says that the buyer has the right to withdraw and retain their deposit if they don't like the results of a home inspection. So please don't put clauses in there that don't hold water. And please, as a seller's agent, don't assume that sentence that you guys write back in, oh, home inspection is for informational purposes only. A home inspection is always for informational purposes only. The seller is never obligated to renegotiate. Guys, if you want to waive home inspection contingencies, get a form from your broker and have it be clear that that is what you're doing. But, oh my God, the disasters that I'm seeing right now are just, they're scary. They're scary.
Well, Kim, I think this is a great time to mention all the, so you are, if brokers or agents are like, I need better office policies, right? April 7th, you're teaching office policies for us. So make sure people are taking in that. You're also teaching brokerage liability that we talked about earlier, and the other understanding transactions and understanding agency transactions start to finish. So those CE classes we talked about earlier, and everything else, you can see why you need to take those with you coming up in March and April, right? Because you'll talk about all these things and get them all shaped up. I do want to mention, you know, kind of one more thing too, to get your thoughts on it, because we're seeing it, and I hear this all the time from people. When you get down to it, it's a lack of knowledge, which is more problematic. But as a listing agent, I'm not going to take escalation clauses. Can you talk about escalation clauses and what your best practice and advice is around buyers using them and sellers taking them?
Well, you know, again, and Ryan, you know, you've mentioned this a couple of times, you know, what is the best practice? I think anything is possible in real estate, provided that you've had a timely and discussion with your buyer or seller and allow them to make an informed decision. So let's talk about two words there, timely and informed. The time to discuss escalation clauses with the seller or a buyer is not when you're writing the offer. That's not when you want them to wrap their head around what it is. Talk about escalation clauses with your seller when you're doing, how do you want me to handle offers? And especially with buyers, you know, it may be an effective tool with the buyer, but if they don't understand what it means when you're sitting there, and by the way, you should be doing a buyer client interview as long as the same amount of time you're doing your seller client interviews. And if you're not an ABR, then you may want to take that course as well. But accredited buyer representative, but you should be spending time with the buyers, talking to them about what tools are available. So back to escalation clauses, we talked about a timely discussion And then we talked about completely informed, and they need to understand the risks and the rewards. So obviously every seller wants to get the highest price and every buyer wants to get their offer accepted. You know, escalation clauses, to me, I'm with you, Ryan. I would tell my seller, no. You know, it's kind of like a race to God only knows where, and it's kind of fast and loose. What I will tell you is if you're using an escalation clause, for the love of God, please don't do the escalation clause like I've seen, which is similar to home inspection for informational purposes only. Buyer willing to pay $1,000 over the highest price, or whatever it is. If you're going to insert an escalation clause in an offer, please, for the love of God, use one that has been professionally prepared by an attorney or your broker or your association or by somebody that knows what they're doing, because that's not the beginning and the end of an escalation clause. What if your offer is accepted? Do you expect to see the offer in writing? Can the offer be in writing, but the name's redacted? Do you, I mean, can it be from somebody in your office? What if I wanted to have Annie and I work in the same office and I had Annie write another offer? I mean, there's so many loopholes for issues with escalation clauses, especially the way some of us are writing them. So what I would recommend, and here's if you're going to use them, please use a properly prepared one by an attorney or somebody that your brokerage has hired or your association has hired to prepare one. Having said that, let's get away from escalation clauses. How about this? How about, and I've done this a number of times, you know, first of all, when I have multiple offer situations, I tell my clients they'll be getting a spreadsheet from me. And if you don't know how to make a spreadsheet in Excel, you can take a class and learn how, or I'm sure there's somebody in your office that'll make one for you. But this is where your office policy comes in. What information are we going to put in that? I put the name of the brokerage. I don't put the buyer's last name. You may not even have to put the name of the brokerage, but I would put things like asking price, down payment, escrow, how much they're putting down with their offer. I would put how long their offer is good for, you know, the dates, the facts, the things about the offer, not necessarily about the people. You don't want to, I don't put names because I don't want to be accused of somehow discriminating against people with names that begin with A or something. So anyways.
Well, there's a big conversation in New York about submitting offers and blocking out names altogether now.
Right, because, you know, people could discriminate, and honestly, it's, you know, it's a hot mess that gets into love letters and all this other stuff. But I put together a spreadsheet, but in the spreadsheet, what I have started to add, and you discuss with your broker what needs to be on that spreadsheet, but what I've done is how much over the accepted price is your how much over the appraisal is the buyer willing to pay? Because that is definitive. So let's say the house is on for 500,000. You get offers of 520, 530, 580. Well, of course your seller is going to want to accept the 580. But if that's an FHA loan and that appraisal doesn't come in, your buyer isn't paying anything near 580. And here's a practice that some of you may be aware of that I think is just terrible, but some people are just coming in and offering any ridiculous price on any property just to tie it up and get it under agreement so that then they can renegotiate after a home inspection, or then when the appraisal comes in, they just say, look, we have no idea what the market value of this house is, but we'll just pay whatever the appraisal comes in at. And the seller's put in a really bad position because A, you didn't tell them that they were accepting a crazy price offer that would never appraise. And a lot of people don't know that after 4 to 6 weeks on the market, you know, what is the seller's obligation if an appraisal comes in low? They could start the process all over again, but if this is tied to another purchase or they've made commitments for moving companies, they may not choose to do that. So and this is a very hard message to get a seller to understand when they've got 7 offers in front of them. So when we have multiple offers and they're over asking price offers, even with an escalation clause, I don't care how high you're willing to go. My next question to you is, okay, this house is at 500,000. your offer's 550, and I've already discussed with the seller that I don't think it's going to appraise that way, but we'll accept your 550, but how much higher over the appraised value are you willing to go? And if the 550 buyer says, not a penny, but the 530 buyer says, I'll go 20,000 over the appraised value, sometimes that agreement and that line is worth more money than what the accepted price is, especially in this crazy market. And if you get a buyer that's willing to go X number of dollars over the appraised value, how can you beat that? That's better than any escalation clause in my mind, because an escalation clause is still subject to the appraisal. So then you end up with a buyer who's got some cash that they can put towards it, and you've got a lender that knows what they're in for. And I require the lender to put that in writing as well. So maybe suggest that if you are privileged enough to get multiple offers that are not FHA buyers, because remember, the FHA amendatory clause is going to counteract anything you put in writing. So if you have an FHA buyer there, they cannot be required to move forward if the property doesn't appraise to value. Not discriminating against FHA, but you can, because you can discriminate for financial purposes. I'm not saying they're bad loans, but if you try to put in a line like that and then hold somebody to it, the terms of an FHA loan are not going to require it.
All right. Well, I think you hit on just about everything. I don't see too many questions other than just everyone. So, I think this is the big question, right? Like, what do you have to show, and I think a lot of ours use the MAR escalation clause, and this might be more of a question that we typically have with Catherine on, but, like, I think people are asking, well, what of another offer can I show someone else to justify my escalation clause? Because like, am I allowed to just show someone else my other offer to justify coming into the escalation clause?
Well, if the seller allows you to share offers, then, again, it has to be with your seller's permission that you're releasing the terms of other offers. So you need to get your seller's permission. And then the other thing is,
take an escalation clause without getting that permission in the first place. So the seller shouldn't be taking it if they're not willing to release that.
right. And then the other thing is, I would redact information from other buyers, even though you may not have to, but again, good discussion to have with maybe Catherine Taylor, but you can also present confidentiality agreements that you expect the seller to sign if you're a buyer, and say, I don't want you to share the terms of my offer with anyone else. Now, that's probably not going to go over well, but if you don't want your information shared, this is part of the problem. I, as a listing agent, if I'm going to send you another offer to justify the escalation clause, as a courtesy, I'm going to cross out the buyer's name, and I'm going to cross out the other brokerage and send it over. But, I'm going to leave the bank pre-approval. I'm going to obviously cross off the buyer's name on it. But, I'm going to give them a courtesy. But again, if I talk to my seller up front, we're not doing escalation clauses, because I know that at the end of the day, they're only as good as the appraisal. I'm more concerned with how much over the appraised value your client's willing to pay.
Yeah, I think the bottom line is I kind of say this in this market, right? As a buyer's agent, treat the listing agent how you'd want to be treated as the listing agent. Realize that they have a lot going on and they're dealing with a lot of these complicated things with sellers. And same with listing agent. Treat other fellow buyers agents how you're getting frustrated with your buyers losing out on properties. So remember that when you're dealing with buyers agents, right? This is a frustrating market to be in for agents. And so, have some patience and some sympathy and empathy when you're dealing with others.
Yeah, this market will turn at some point. We'll all be begging for buyers to come back again. And, people remember how they've been treated. So I try when we're rejecting offers, I try to pick up the phone and say, I typically always say, thank you for the time that you took to prepare your offer. I know you've probably done dozens of them in this market. And I try to pick up the phone and make that call. And some days I can't even call my own mother. So it's a struggle to make that phone call to everybody that you've had to reject. But I just remember 2008 when I would have done anything to have some of those buyers and buyer agents back. And I think that this market's cyclical, and hopefully we don't see a huge downturn, but to Ryan's point, treat people the way you'd like to be treated.
Yeah, making 20 phone calls may not be feasible, but at least, text them or email them something, right? Before you mark it pending in the MLS, let them know that you took another offer, right? I think that that's one thing that people that I hear buyers agents get so frustrated about. They're waiting to hear back from an offer, and then they already see that's under contract in the MLS.
Yeah, they hear it from their buyer. Their buyer sees it before they do.
Exactly. So, all right. Well, I think we have one question that may have come in before we wrap up. What a listing agent informs a buyer's agent that they have an offer over asking, and there is no other offer. Is that 93? The question is that 93A violation? I think you have a lot more problems than you have a lot of problems there if the listing agent's saying that they have an offer over asking and there's not any other offers.
Yeah, it comes up time and time again. Our buyers asking us, well, do you think they really have multiple offers? Do you think they really have that price? Here's what I tell buyers in this market. We are never going to know what's going on because the seller's agent has no obligation to share with us the details and the terms of other offers. They just need to tell us if there is one. So we should assume that, yes, there are other offers. And do you want to play that card? I always say, let's forget about what other buyers are doing. Let's focus on what you want to do as a buyer, because buyers will drive themselves nuts trying to figure out what are other agents doing? What are other buyers doing? Do you think they went higher? This is what I tell buyers. Look, you need, and this is why you need to have that buyer agent interview. You need to know what your walkaway number is on a property or in general. And your walkaway number is, if the house is on for 400 and you offered 410 and the house went for 411, that your answer would be, that's okay. My walkaway number was 410. I'm comfortable with that. But if you find out that the house went for 415 and you offered 410 and your answer was, oh, we would have gone higher, then 415 is your walkaway number. You need to know as a buyer, based on what I'm giving you, market information, comps, the sale to list price ratio for a community, and inventory. That information is what should help a buyer determine how high they're going to go, not whether or not the listing agent is feeding us a line of crap and what 1,000 other people are doing, because you can never quantify that information. The only thing you can use is facts that I'm giving you. And, and I also say on a scale of 1 to 10, or your checklist, how many of your needs does this meet? If it meets anything more than 8, then you should be making an aggressive offer. So try to focus them on what they can control, not what you can't.
We had a question, and I don't want to, I'm sure I know what you're going to say, but question was about the language, what language to use around going over appraisal and writing that in. I'd say your answer is going to be talk to your broker, see what the office policy is around that, talk to your broker's attorney, right? Like, be very careful when you're writing the language around, when you mention, say, how much are you willing to go over appraisal, be careful as you write that language in too.
Yeah, right. You need to have it clear and concise. I don't believe that the sentence of subject to the property appraising at or above value, that's useless unless it's a cash buyer that's going to do an appraisal. Because if we read our mortgage contingency clauses typically say that the buyer is not required to apply for more than one loan. And one loan is when they sit with their purchase and sale. If the house is $500,000 and they're borrowing $450, the loan to value ratio is 500 and 450. Those are set numbers in their loan application. If the appraisal comes in less than 500, those two numbers have now changed, and technically a second application needs to be resubmitted. So the buyer is off the hook if there is a mortgage contingency that prohibits them from having to apply more than once. So that language to me is redundant, and it's not necessary in any offer where there is a mortgage contingency clause. To me, it kind of makes the agent look uninformed. And, subject to the property appraising at or above. So what if it doesn't? There's no teeth in that sentence. It doesn't say if the property doesn't appraise at value, then the buyer has the right to withdraw and the seller will return. I mean, there's just no teeth in that statement. So I would get away from that at all costs and talk to your lender about what you feel is a necessary clause. And most of them will tell you don't need that.
And then the last thing, going back to the teams, a question came in about them wanting to put the team name in the P&S, the purchase sales agreement rather than the licensees' names. Because the team's not a licensed entity, right? It should be the licensees, right?
Well, so first of all, and we're talking purchase and sale. Was that the
That's what
question?
it said. Yeah, purchase and sale
Yeah.
was the question.
So a purchase and sale is an agreement between a buyer and a seller. The brokerage technically has no business being in a purchase and sale with the exception of 2 paragraphs. One is saying that they're duly licensed in the Commonwealth of Massachusetts, and the other is if they're acting as an escrow agent. So if you're acting as the escrow agent, no, you're not putting your team, because your team doesn't hold escrow, your brokerage does. And if they're asking under the licensed, are you duly licensed? Then they're asking about the brokerages, not the teams. Because again, you take out the word team and put in the word agent. In a purchase and sale, you don't ever list the agents involved. All when they're asking for that information, it's talking about brokerages. So in both of those cases, the only 2 cases where I can think of that you would be required to be listed in a P&S, it would simply just be your brokerage. Now, I think I just saw a thing that's about TRID. Same thing. Your name and your license, individual license, and your brokerage license, but not your team. TRID does not recognize teams. And the only other thing I can think about is a paragraph on compensation. And a lot of, again, the purchase and sale is agreement between the buyer and seller. Compensation is always between brokerages, not between teams or teams and another brokerage. So even in that paragraph, if you guys aren't in the habit of saying, like sometimes I see in the compensation portion of a purchase and sale, it says, per MLS a listing, or per MLS, or per the listing contract. If you actually put in names there, it's always broker to brokerage, or brokerage to brokerage, is never team to team. Teams, again, substitute the word agent. That's not the right place for it.
Yeah, I think we're having a good meeting tomorrow between some attorneys on the Cape and brokers and managers as a little roundtable, because one of the things that we're hearing so much about on the Cape attorneys is Cape attorneys asking brokers to sign the P&Ss, and Taylor's advice from MAR and everyone else is like, I'm not signing P&S, it's not an agreement myself, right? Like, that kind of stuff. And so hopefully try to air some of that out tomorrow to have a conversation about some of these things that, association legal counsel saying don't do, and attorneys on the Cape saying, no, I need you to do it. And there's a lot of confusion and adjustment. So if you're a broker or manager, make sure you go on our website and sign up for that roundtable tomorrow to have that good discussion that Catherine will join us for too. So I'll probably ask her the escalation clause question on what you can show from the other offers as well. So thank you, Kim, for joining us. You were great today, as always, and a great preview to our March and April CE classes that you'll be teaching for us. And I know you don't make a habit to necessarily go teach CE except for us, and we really appreciate it because you just love our members so much.
Well, and I get to teach with Whitney, and Whitney brings a lot of your local questions and issues to the group. And then we do have a lot of exchange and back and forth. So I really do enjoy teaching it, and I appreciate the opportunity and hope to see all of you there for those upcoming classes.
Thank you very much, Kim, and have a great day. And
Thank you.
I'm sure Whitney will drop your contact information in the chat if anyone had any follow-up with you. So
bye, guys. Have a great day.
Thank you guys so much for everything. And next month, we are putting together a panel of where your sellers want to move and how those markets are doing there, because we're hearing so much of people saying, well, my sellers don't want to move there. So if you have areas of the country you think your sellers are more likely to want to move or are thinking about moving to, and you want to know how the market's doing there, let us know. We'll put together a panel of agents for that. So thank you guys very much and hope you enjoyed today. And we will see you next month on Zoomed In.